Will the Nio management be able to save the company from bankruptcy? That's actually a real question that we as investors have to ask ourselves now. And in today's video, we're gonna try to figure out by looking at the revenue, how they are scaling, their cost of sales, the gross profit, the R&D and sales budget, and everything combined with the delivery and expected deliveries for up and coming 2025 and 2026. We can see on this graph here that if we give them credit and if we believe that the company is going to be able to scale their sales from April onwards, which some of the details out there suggest that they might be, then we are maybe looking at the worst part of the year behind us. But that's only in terms of vehicle deliveries. Remember that there's one thing to deliver a lot of vehicles, there's another thing to actually make that and also be able to scale your business and make money on that. And that has been the biggest question for Nio. The stock is just, going from bad to worse. If you bought anywhere, above 40, 50, 60 US dollar from 21 to 2022, you're down anywhere between 60 to potentially 90%. So it's been a really, really bad trend, comparing especially to even the likes of Tesla or let's say Xpeng, that is the main competitor. I would say Xpeng is now almost a couple of 100% up compared to the 52-week row. So why is Nio struggling so much? And the best thing I can tell you is that this graph explains it all. So the revenue has been increasing over the past 3 or 4 years. You can see that Q1 of 2021, they made just above 1 billion per quarter. They've had a few ups and downs, but I believe that the lows that you can see in here, there in early 2023, early 2024, and also early 2025, it's gonna be depending on the weak Q1 deliveries. Nio over the past 3 years are very weak when it comes to Q1, even more so compared to the other competitors. No one usually have their best quarter in Q1, but Nio seems to be affected even more than so. But looking at the cost of sales in the dashed gray line below the green lines, you can see that they haven't been able to scale that much actually. Like the revenue goes up, but the cost of sales also goes up essentially almost as much. So the scaling has not been in their favor. You could argue that actually they had better cost structure already in Q1 of 2021. And I believe the reason why the stock price was so high then, people projected revenues like they have now, but they would expected by now that Nio would make much, better scalability and taking care of the cost of sales. And also you can see that the operating expenditure, the R&D budget, the sales budget in the pink dashed line with the stars representing each quarter, it's been going up quite aggressively. And after Q4 of 2024, I'm modeling a little bit of a stagnation. That's the best case scenario, right? I mean, the best case scenario would be if they actually for real cut down costs, but I wouldn't expect them to be able to do that since they are launching Firefly, the third sub-brand of Nio, in April now, especially even in first half of the year in Europe. And Onvo is still in the early stages. They need to ramp and market that car, so that brand with the Onvo L60 and now L80 and L90 coming up soon. So I wouldn't expect that their operating expenditures would go down. At the best, slightly stabilize, but it's probably gonna go up. But I was trying to model in, somewhat of a stagnation in that part. Then looking at the gross profit in the white, and you can see that, they're just essentially not making any gross profit. In these 4 past dots here, they are my expectations in a positive way of looking at Nio's business right now. So that's not probably going to be realistic, but at least that's the hope. If they manage to scale their sales, remember if you look at their sales, currently we are at 42,000 or so for this Q1 of 2025. We just got that number a couple of days ago. I'm expecting them to really hit the strides with Firefly and Onvo now from April onwards. So I'm expecting 80,000 deliveries now. This is now or never for Nio, remember? So they have to really perform now. Now going back to this, and you can see the final one, the net loss. And it's just ever since Q1 of 2021, they've never been as close to profitability as they were 4 years ago. That's the issue with Nio Stock. They are nowhere near of getting close to profitability, whereas Xpeng also had this similar picture here, been close to profitability in early 2021. Then with all the different stuff that happened, the supply chain issues in 2021, 2022, the skyrocketing of the lithium carbonate price for the batteries. So everything has been, happening over the past few years. But Xpeng, since a couple of past quarters or 3 or 4 quarters, they're showing strong improvement. And they're almost on the level that they make, I think, a couple of 100 million or so net loss. And they're very quickly moving towards profitability. Whereas Nio, you can see Q4 is the latest actual number. These last four again are expected estimations. And Q4 was really bad. I'm hoping that Q1 will be slightly less bad, but it's still gonna be 800 or so million. But some people are even projecting above 1 billion in net loss in Q1 due to the fact that their sales, the number of sold cars are gonna go from mid 70,000s to low 40,000s, and that's gonna probably have a huge effect of Nio's profitability in Q1. But in Q2, hopefully, if they manage to get 80, 75,000 sales again, maybe we are gonna slightly move back in the right direction. And if the management is actually real for this time about their cost cutting, I don't believe them, until I see the actual numbers. I don't believe the Nio management. They have on so many occasions essentially lied to investors in one way or other, or at least not told us the entire picture, or they have given us very over exaggerated estimations, and that's so we cannot trust that management. Going again to this other graph here, I believe the most thing that I'm sure of in terms of looking at it in a positive way is the delivery numbers. I do believe that they're gonna stabilize at around 30,000 at least, but at some point in the summer and onwards. The same way that last year with the blue columns we hit 20,000 5, 6, 7 months in a row and then had a really strong December. I believe we're gonna see the same case this year. But the problem is that already last year we were hoping that this stabilization of around 20,000 sales per month would result in move towards profitability, and that did not happen. Look at this, Q1 of 24 through Q4 of 2024, and the net loss was just first stabilizing. Everyone expected that Q4, due to the sales numbers, would go in the right direction, but actually it completely moved to the other direction, made one of their biggest net losses ever on top of their, record number deliveries. So it doesn't make sense. How can you possibly have your best ever delivery numbers in terms of vehicles sold, but your net loss is increasing? Well, one of the reasons is they are so bloated compared to the other companies, it's not even real. They need to immediately, I've been telling this for past year now, they need to absolutely halt their battery swap station. Not a single one more battery swap station needs to build out right now. This is about the company's future. If they continue at this rate, building tens of swap stations in some weeks and some 100 or so per month, this company is not gonna make it unless someone else pays for them. There are some rumors out there that there's some partnerships, but we've had all this rumors about Nio partnerships with other companies and other companies making cars that are gonna utilize the battery swap station, and we still have not seen that in volumes. So let's wait and see about that again. But I think they have to stop this. They're also bloated when it comes if you go to Nio in Europe, they have almost 59 power swap stations. And this is the thing. In Europe last year, in Germany, the biggest car market in Europe by far, they sold 398 cars through the entirety of 2024. So, I mean, you're spending so much money on your infrastructure ahead of time in a company that doesn't have enough money to survive. They're burning 1 billion or so per quarter, and you're telling me 400 cars, less than 400 cars, essentially 30 cars a month in a company with 90, 80 million population in Germany, is gonna justify you to build up swap stations for that ahead of time in this very dire situation for the company. I don't buy that. I think they should halt all the expansions in Europe. There's another problem for Nio, and that's essentially their business in Europe, currently sitting at 59 swap stations, and they managed to sell, I believe, less than 4,000 cars in entire 2024 in the entire European market. And in the biggest market in Europe, in Germany, they sold 398 cars in a single year. which is roughly 35 cars per month. So all these swap stations and all these like sales houses, I'll give you one example. In one of the biggest cities in Sweden, they're doing like in the prime location, probably the most expensive offices in the entire city. An office that previously belonged to Tesla, which used to sell probably tens of cars a day in that office, at least a week. Nio barely sells a car a week in that office with multiple people working there. And you imagine that the cost of that office in a year is in the multiple tens of millions. And the sales, I mean, they barely sell like 50 cars from that office a year. So it doesn't just add up. And there's many of these offices in Europe. So immediately as we speak, they need to cut down on everything. Halt the swap station infrastructure, because the current utilization, the fleet is so small and minuscule compared to the current limits of the already insane amount of swap stations they already have. So there is no danger of, people waiting at swap stations. They have so many of them, and the fleet is so small compared to what this current swaps infrastructure can handle. So there no need to build more swap stations. They also, in my opinion, need to immediately, from right now, stop to invest in unnecessary car models. They have so many models that cannibalize each other. ET5, ET5 Touring, ET7, and like all these SUVs, and Onvo cannibalizing Nio, and vice versa, and it just doesn't make sense. They need to cut down on R&D and bring that budget, R&D budget, currently sitting at 470 or 400, and latest quarter was 498 million, essentially 500 million. I like to see that R&D budget go down to at least 350. The SG&A go maybe down to 500. They need to do that, like combine the Nio and Onvo sales offices. There's some rumors that they're already starting to do that finally. Also, cut down on all unnecessary offices that don't have enough sales to essentially make the cost bearable. For example, the office that I mentioned in Sweden, like just cut that down. Like hope that the name recognition. I mean, how can BYD sell so well in Sweden, right? It's not, one office in the prime location of the city. People are not dumb. They buy the car that is affordable. They're not gonna buy your car just because you have the nicest, let's say, sales house in the city. I mean, they might go in there and look and say, oh, that's a nice car. But when it comes to paying for that car, if they see that the BYD gives them essentially the same equivalent for 200 or let's say 20,000 euros less, why would anyone spend on the Nio expensive car, right? So it doesn't make sense. They got everything on the wrong. So they need to cut down on sales, on research and development, on the number of calls. And I'm saying again, stop and halt immediately every single swap stations. And the interesting part here is that if someday, like 1 year from now, they start to realize, oh damn, we need many more swap stations, well, it's quite easy. It's essentially just a few battery packs and some cheap piece of land. You're gonna probably make one whole swap station less than a week in China, in less than a month in Europe. So there's like, it's just so, I have to be honest with you, I think this is so stupid to spend so much money on swap infrastructure where the company's future hangs on a thin thread. And look at the stock price, like so abyssal, like compared to even competitors like Xpeng, right? Xpeng is like 300% up compared to the 52-week low. And Nio is just like continuing to put in 52-week lows, week in, week out, month in, month out, year in, year out. And finally, I want to finish with the, just show you a few examples of just how bloated Nio are. So on this graph, you can see SG&A per vehicle sold. Blue is Nio, red is Tesla, and green is Xpeng. And you can see that Xpeng is essentially closing in on Tesla, being very lean. And Nio is currently like 3 times as bloated, more than 3 times as bloated as Tesla is, and essentially 3 times as Xpeng as well. Now let's go to R&D per vehicle, right? Is that better? So let's see. And you can see that they're spending 2 times of what both Xpeng or Tesla does on essentially R&D per vehicle sold. And it's just so crazy to see this graph here. Tesla in league of their own although I haven't updated the Q1 numbers in terms of deliveries. But you can see that Xpeng went past them in Q4, and also in Q1 we got the numbers for Q1 deliveries, and Xpeng was like at 90,000 or so, and Nio was at 42. So no matter how you look at this management is right now, I mean, with the current state data that we have, they're incompetent. Like, let's be frank, don't shy away with like pressing this management. I mean, look at, for God's sake, like look at the stock price. This is one of the worst stock prices you've ever seen in your life. Like, I mean, the way this company and this management has, you know, handled the company's valuation for the past 5 years, especially since the peak of 2021, like every single time they break new lows. So we have to be honest, this is an incompetent management. They're on the verge of bankruptcy at this current stage if they continue on this path. They need to, like, they don't need to cut down cost. They need to cut down cost by a whole lot. And do we trust this management to do that? I mean, I wouldn't be surprised if the next earnings come and they come in at like 1 billion or so net loss, right? I mean, that wouldn't surprise me. I hope that they come in at least at 6, 7, 800. But there's a lot of people out there, and despite, you know, large increase in vehicle sales expectations, like currently at around 70 to 80, maybe 90,000 for some people. I mean, a lot of them are expecting a net loss of 1 billion or even more. I've seen some models of speaking of 1.2 billion net loss. And here I'm like giving Nio every credit I can, and I'm having them at 700 or so million net loss. And I do think I'm hugely optimistic here. So yeah, the company is in a really dire situation. It can be saved, but the incompetent management should essentially start to, like yesterday, to do all these required changes. Do I believe they're gonna do them? Sadly, as things stand right now, I don't. What's your thought about Nio? I would love to see your opinions on this. Please like, subscribe, and comment in the comment section, and see you in the next one.